Welcome back, folks. This is Non-Farm Payroll Friday, and you should not have been participating in today's action, but in case you did, I don't want to hear about it. All right, so this is February 5th, 2021. All right, folks, this is the 5-minute chart for Euro Dollar for Non-Farm Payroll Friday, February 5th, 2021. And if you're not ready, pause your video. All right, so we have the fair value gap premium high and fair value gap discount low. Those levels have already been made available to you in previous discussions. Pre-market, ahead of New York midnight time, we had a low, it was swept there. All of this was advancing prior to the non-farm payroll number. All right, so we have London open kill zone, displacement on the upside. Small little consolidation, drops down. In here, you have small little imbalance with this old high back here. Extend that out in time, in the imbalance, and between kill zones. So this is a dead period of time. But it creates a mitigation block defined by the low and high of these candles respectively. Extend that out in time. We have optimal trade entry. I'm using the high here and the low here to frame that. So if you put your fib on that on your own chart, you'll see it lines up handsomely with optimal trade entry there inside of the mean threshold of the mitigation block, which is these 3 consecutive up close candles. During the New York open kill zone, 8:30 a.m., non-farm payroll numbers release, creates a buy side imbalance, sell side inefficiency. We trade up to and then find support at the fair value gap discount low. So there's a convergence of bullish order block, fair value gap, trades back to the order block, and the low of the fair value gap over here. Okay. Price moves higher, takes out a short-term high, says offset distribution there, declines and traces and makes another leg higher, and trades up into the fair value gap premium high. And again, these levels are already defined and shown to you in previous videos. So this week, we've been monitoring this. Remember, it was a target on the downside. And now we went below it. So now we're using it as what would be expected as classic support resistance. Pretty neat, isn't it? And you can see, obviously, the high at the fair value gap premium high was exceeded not by much here, but traded to essentially during the London close time period. So not bad. To me, I still would not have been interested in trading this, but for illustrated purposes, you can still glean experience and understanding. Let's move over to cable. All right, here's the British pound 5-minute chart for February 5th, 2021, non-farm payroll. If you're not ready, pause your video. All right, similar situation. We have a low that was taken out ahead of midnight in New York. So we had a stop run. So there should be an ability for the price to start to rally. We've already went down essentially for the week, and we have a small little fair value gap in here that I've not annotated because I want to keep everything open as much as I possibly can and still allow you to add your own annotations. But we have a fair value gap here, optimal trade entry for line up and kill zone. Price rallies. Small little imbalance in here creates a short-term high prior to this one. Offset distribution. Declines, takes out sell side liquidity here between the kill zones. Market rallies back up. Finds support at the mean threshold of these last 2 closed candles prior to this run lower. So we have a low, high, lower low, find an up close candle or candles that make up the highest and then extend that in time. Cut through candles, sorry Sam, we're not supply and demand. Mean threshold, which is the middle of a order block, trades into it here, and we have a small little order block with a fair value gap there. New York open, from here to here, optimal trade entry, from here to here to here, optimal trade entry, rejection block, mean threshold, bullish breaker. You can see why I don't have all this in the chart. It's a lot. Another optimal trade entry here, rallies off of, look at the bodies supporting the breaker. Then we have buy side imbalance, sell side inefficiency, runs to buy side liquidity, which is staying above this old high. And this in itself creates a breaker because we have a low, high, lower low, extend that out in time. Same premise. We're working basically the mean threshold. We do trade down to the order block here. Support, just a small little deviation below the low of the breaker, but that's normal with breakers and mitigation blocks. You can wick through, or I guess create a tail on your candle like this one here, and it can violate it just by a little bit, and it's okay. I look past that. The idea is we're seeing accumulation in here. It rallies up, finds support at the bullish order block, which is these 3 consecutive down closed candles, hits, runs, fair value gap, comes back in, about 90% closure of that imbalance there, then sends it up into the bearish order block on a 15-minute time frame. And you'll see this on the weekend commentary as well. Okay, so your homework is to find that in your own charts. But it makes the high of the day during true day, which you'll learn about in the mentorship during the London close. So we have the low forming here between the kill zones, which is one of those things that really support the idea. I hate non-farm payroll. While there are some signatures in here that you can nod your head and say, yeah, why can't we take these trades? Why can't we take these trades? It doesn't provide me the symmetry that other market days would allow for. In other words, the price action isn't as pure. It just spends too much time dilly-dallying around, and it makes these little runs in price that I don't like to see. Where I don't like to see price running out short-term lows or short-term highs between the kill zones. Now, I expect that phenomenon to occur in the kill zones, but if it's happening like this between them, it's just, to me, it's something that you as a new student developing would get hurt. And even myself, I can read this wrong and do something that would cause an error and a loss of money. So that I don't trade it. It's simple as that. So that's it. I will touch base with you this Sunday when I post the weekend commentary. It'll be between 10 a.m. and 11 a.m. my local time. So just think of New York local time, and you'll know what time that should be popping up. So enjoy your weekend. Be safe, and I'll talk to you then.